And we are quite confident that with this strong parentage, solid track record of NTPC Green Energy, is strong credit rating, visionary leadership of the company, and its deep commitment towards sustainability and clean energy, NTPC Green will continue its journey towards change in that clean energy space in the country. On behalf of Idbi Capital, I sincerely thank all of you who have come here, who are attending this conference, and let us together join and make this issue a successful issue. At the end, I would say together we are one step closer to powering a greener and more sustainable future for the country. So let us participate together in this issue and help India move towards a more cleaner and sustainable source of energy. Thank you so much. Thank you, everyone.
Good afternoon. Good afternoon. You want me to go there? Okay. If you feel convenient. No, okay. So good afternoon, and thank you everyone for coming here, especially colleagues from print and media, because all others on this dais, we had been busy on this kind of project or the kind of process. And let me thank all the BRMs and the teams and for putting the kind of things together and putting hard work on this. Let me, I think, reiterate what was just said, that NTPC Green Energy, which is 100% subsidiary till now, before listing, and it is 100% subsidiary of NTPC, which is the largest power generating company. We supply 24% to 25% of the total electricity in the country, with the installed capacity of only 17%, which indicates our efficiency in the sector. More importantly, I think, Jane, what we are now sharing with you is that this company we had specifically named as NTPC Green Energy Limited, not NTPC Green Power Limited. And NTPC Green Energy means it's not going to be only solar, wind, it's going to be storage, and it's going to be green molecule going forward. So at present, we are only looking at, in the short term, only with the green power, which is solar plus wind, and today we have 3,300 megawatt commissioned capacity. By March, we will be having 6,000 megawatt. By next year, March, means March 26, we will be 11,000, and March 27, we will be having 19,000 megawatt of this. Going forward, we will be trying to utilize this solar and wind energy. This is which is the renewable energy for not only meeting the peak requirement and utilizing through storage mechanism, which can be BESS or the battery and pump storage, but also we are looking at many other things, whether it's thermal storage or whether it's going to be kind of CO2 based solutions. This is what there's something which is a work in progress to explore those things. But at the same time, going forward, there will be focus also coming towards the green molecules, which is everybody knows about green hydrogen, but I think the hydrogen and will be utilized through its derivatives, which is going to be green methanol, ethanol, DME, sustainable aviation fuel, kind of urea, you named, and a few of them, and there can be a further processing of that. We are very close to start work on our hydrogen hub near Visakhapatnam, the place called Pudimadka, with the 1,200-acre land, which is the coastal location. But more importantly is that we have a very, very strong team, which has gained the expertise in the all spheres of the renewable. be it design, engineering, construction, operation, commercial aspect, sourcing, all you name it, and we have it. We don't have any intention to have the kind of getting into the EPC or getting into the manufacturing, because we don't want to lose and we don't want to get stuck in this fast changing technology, and we will be very clear that whatever is the best solution which we'll be able to provide, and through that we will be able to serve the consumers far better and increase the shareholders value into that. With that, let me take a pause here. We will be having many, I think we will have the chance to interact, but let me, before concluding, let me then request Director Finance to make the presentation. Thank you. Pardon?
In tune with the global energy industry's sustainability focus, India's renewable energy sector is growing rapidly. It ranks 4th globally in total renewables, wind and solar installations. It is now the 2nd largest renewable energy market in the Asia-Pacific region, behind China. India's power demand has shown strong growth, rising by approximately 8.4% between fiscals 2021 and 2024, driven by infrastructure investments, economic growth, power sector reforms, and improved performance of state distribution utilities. Up to March 2024, the installed grid-connected RE generation capacity comprised 43% of India's total installed generation base, thanks to strong government support and competitive tendering. Wind power comprised 10.4% of India's total utility power capacity. In response to the global energy industry's focus on sustainability, NTPC Green Energy Limited was incorporated as a wholly owned subsidiary of NTPC Ltd, a Maharatna Central Public Sector enterprise. Today, we are the largest renewable energy public sector enterprise, excluding hydro, in terms of operating capacity and power generation in fiscal 2024. Our renewable energy portfolio encompasses both solar and wind power assets with presence across multiple locations. Our projects generate renewable power and feed that power into the grid, supplying several utilities or off-takers with green energy. We are also making inroads into battery energy storage, green hydrogen, etc. As of September 30th, 2024, our operational capacity was 3,220 megawatts of solar projects and 100 megawatts of wind projects across 6 states. We have maintained a strategically focused approach in developing a portfolio of utility-scale renewable energy projects with public sector undertakings and Indian corporates. We have entered into long-term power purchase agreements or letters of award with 17 off-takers across 41 solar projects and 11 wind projects. As of September 30th, 2024, our portfolio consisted of 16,896 megawatts, including 3,320 megawatts of operating projects and 13,576 megawatts of contracted and awarded projects, while our capacity under pipeline, together with our portfolio, consisted of 26,071 megawatts. Our parent company, NTPC Limited, is a public sector enterprise under the ownership and administrative control of the Ministry of Power. NTPC Limited looks to expand its non-fossil based capacity to 45 to 50% of its portfolio by 2032. And NTPC Green Energy Limited, we aim to add 60 gigawatt renewable energy capacity towards it. Today, we are benefiting from our strong balance sheet, AAA rating from CRISIL, and NTPC Group's time-tested credibility duly ratified by leading Indian and foreign rating agencies, which has made access to low-cost capital smoother. At NTPC Green Energy Limited, we also benefit from the support, vision, resources, and experience of NTPC Group, a large-scale integrated energy business with over 76 gigawatts electric power generating capacity. Today, reinforcing NTPC Green Energy Limited's financial strength is the NTPC Group's 4922304 million rupees in assets and rupees 75,000 million equity contribution to our company since inception. We are considered a partner of choice by many public sector undertakings for the fulfillment of their renewable energy development goals. We have signed joint venture agreements to produce renewable power with several leading energy entities. At NTPC Green Energy Limited, we handle every project phase from pre-bid and financing to construction and commissioning with innovation and cost efficiency. For solar projects, our expertise spans design, engineering, installation, and substation work. For wind projects, we focus on turnkey construction, including turbines, transmission lines, and substations. Our operations and maintenance services for renewable energy projects are provided through third-party service providers. We deploy the latest technologies to improve the operational efficiency of our plants. We have a rigorous quality assurance and vendor empanelment process with a limited number of approved suppliers. Our in-house procurement team then monitors our purchases throughout the supply chain.
We will continue to grow our project pipeline through prudent bidding and strategic joint venture to reach 60 gigawatt. Our emphasis will remain on driving efficiency and cost reduction in project execution and operation and maintenance. Apart from adding renewable capacities, we are investing in storage technologies which include battery and BSE. We are also exploring green molecule and other associated technologies.
NTPC Green Energy Limited, a dedicated renewable energy company, is committed to advancing India's clean energy transition and achieving its net zero goals.
So welcome you all once again to this IPO roadshow. Much of what I wanted to make a presentation freeze. खड़ा नहीं होगा सब कर्जर ही नहीं दिखा इसका पॉइंटर ही नहीं है अभी यार बड़ा था Welcome once again. Much of whatever I wanted to cover in this presentation is already there in the audio-visual film. So I can indeed brisk past many of this and not repeat it so that we'll have more time for Q&A. As you can see that there's a fresh issue of equity shares of face value 10. We hope to mop up 1 lakh million. And the price band is kept at 102 to 108 per equity share with a discount of 5 rupees per equity share is applicable for eligible employees. Objects of the issue is a combination of capital expenditure predominantly and also retirement of some costly loan intermittently and for general purpose. And as you can see that we are back with 4 leading book running lead managers. India is the 5th largest economy with a projected real GDP of 6.5% growth in 2025, the highest among the 10 global economies, India's robust growth rate and relatively low per capita income consumption of 1.3 megawatt hour shows significant potential for expansion in both economic and energy sector. You can see that there is huge market opportunity in India for renewable energy sector, and also stem from the fact that India is the second largest renewable energy market in the Asia Pacific. India's global ranking is 4th in total renewable energy, wind as well as solar installation. India's nationally determined contribution submitted to UNCC is to reduce emission by 45% by 2032 to achieve 50% cumulative electric power installation for non-fossil fuel-based energy resources by 2032, and create additional carbon sink of 2.5 to 3 billion tons of CO2 equivalent throughout additional forest. As can be seen from the graph, the per capita energy consumption in India has been steadily increasing with future growth projection of 5 to 7%. As of March 24, pure play RE excluding large hydro constitute 32% of India's total installed capacity, with solar and wind power accounting for over 65% of the RE installed capacity. From 2018 to 2024, India has added 76.5 gigawatt of renewable energy capacity, with solar and wind being the primary contributors. Looking ahead, RE is projected to comprise 50% of the total installed capacity by FY29. Huge market opportunity exists for RE. Peak demand is expected to increase by 75 gigawatt over the next 5 years, presenting a huge opportunity for capacity addition of nearly 225 gigawatt. RE will contribute significantly with around 187 gigawatt, which would be closer to 83% of the total capacity addition. We anticipate substantial investment in solar and wind energy, projected compounded annual growth rate of 18 and 17% respectively over the next 5 years. The same sets the stage for RE energy sector to thrive in India. Now coming to the NGL brief overview, much of which has been already said here. NTPC Green will be the umbrella company for green initiatives, and we'll have NTPC Renewable Energy under it, 100% subsidiary, where predominantly all the capacity addition will happen. Apart from this, we'll have joint ventures companies with GRVL, which is 51% owned by NGL and 49% with Damodar Valley Corporation. We also have a joint venture of 50% with Indian Oil Corporation. All this will be towards capacity addition, and the offtake will be by the JV partner themselves. These figures have been shared already. As of September, we are the largest renewable PSC, excluding hydro, in terms of operating capacity. We have a portfolio of 16,896 megawatts capacity spread across India, backed by power purchase agreements. Our portfolio includes 17 operational solar projects and 2 wind projects, with 36 projects either contracted or awarded and 17 different off-takers. We also have 9,175 megawatt capacity in pipeline. Thus, our total portfolio in pipeline exceeds 26 gigawatt capacity. As you can see, that we have a strong financial strength, and the company has received a AAA rating, which augurs well for raising very debt at a very cheaper rate and be competitive in this segment. This has been already told. NGL is powered by its parents, NTPC, leveraging 5 decades of experience in executing and running large-scale projects with long-term relationship with almost all the states, and on the supply chain side also. NTPC's equity investment in NGL is already 75,000 million till date, and it benefits from NTPC's robust financials, strong credit power, low-cost financing, and established partnership, giving it a competitive edge in project execution and operational efficiency. We have a portfolio and a pipeline of over 26 gigawatt in solar and wind projects, diversified across multiple geographies and power procurers. You can see from the chart showcasing NGL's growth journey, highlighting its capacity addition to date and future expansion plans. The portfolio spans across 9 Indian states with strong diversification among 15 procurers backed by power purchase agreement for almost 25 years. Talking about revenues and ratings, our past 3 years, our revenue has exhibited a CAGR of 46%, accompanied by similar upward trend in profitability, including operating EBITDA and profit after tax. In H1 FY25, our revenue reached approximately 10,823 millions and a profit before tax of around 2,464 millions. The company maintains a healthy net debt equity ratio and has a strong credit rating, which helps to maintain low cost of debt. Coming to the key parameters, we have consistently robust capacity utilization factor, close to 19% in FY22 and around 25% in H1 FY25, resulting in nearly a threefold increase in generation over the past 3 years. This has led to a robust operating EBITDA margin of approximately 89% in fiscal 2024. Additionally, we maintain a strong operational cash flows. Now, these are some of the comparison in the sector with other peer, where NGL consistently outperform its peers across all key parameter indicators, KPIs, as can be seen. We would like to draw your attention to our operating EBITDA margin, which are substantially better than our peers, leading to a stronger profitability, enhanced cash flows, and allowing for greater reinvestment in growth. Talking about our growth strategies, we'll continue to expand our project pipeline through prudent bidding strategies and strategic joint ventures with PSUs and private corporations. This presents a significant opportunity with the anticipated solar capacity addition of 137 to 142 gigawatt and wind power addition of 34 to 36 gigawatt from 25 to FY25 to FY29. We aim to drive efficiency and reduce cost in project execution as well as in operation and maintenance. Our focus will also include innovative energy solutions such as green hydrogen, green chemicals, and energy storage. NGL plans to continue expanding its project pipeline by engaging in prudent bidding and strategic joint ventures, by leveraging its proven expertise, executing large solar projects, wind energy projects. With a massive opportunity on the horizon, India's renewable sector is expected to see growth, and we will continue our presence and participation in this growth story. NGL enhances project execution by reducing costs through new technologies, bulk O&M contracts, optimized manpower, long-term OEM warranties, pooled supply management, and AI-driven cloud-based remote asset monitoring. Key initiatives on our growth strategy includes developing battery storage and round-the-clock renewable energy projects, establishing a green hydrogen hub at Andhra Pradesh, Pudimadakka. NGL is developing a 1,200 acres green hydrogen hub at Pudimadakka, Andhra Pradesh, for producing green hydrogen, its derivatives, and renewable energy component. A 600-acre section will host India's largest green hydrogen facility of 1,100 tons per day, while 300 acres will be served as an industrial hub for electrolyzer, fuel cell, and solar module manufacturing. Working towards clean energy transition and contributing to to meet its net zero target, NGL avoided 5.35 metric tons of CO2 emission in FY 2024 through renewable power generation, aiding India's net zero goals. Water consumption is being reduced via robotic dry cleaning system for solar modules. Renewable projects are registered under international carbon program like CDM, VCS, and GSC. Our strategies for accelerated development, as detailed in the slides, also involves tie-up of critical solar and wind components, creating land banks, renewable parks connectivity, tie-up of solar capacity, which is the pump storage, battery energy through tenders. We maintain a strong focus on enhancing operational efficiency through advanced technologies, robotics, photovoltaic array, drone-based photovoltaic thermography, and string combined box thermography. To summarize, NGL has a diverse renewable energy portfolio with strong pipeline aiming for 60 gigawatt by FY 2032, backed by NTPC's India's largest energy conglomerate. NGL benefits from strong leadership, its proven track record of project execution, ensuring operational efficiency, financial strength, and enables access to capital at competitive rate, securing large-scale projects. NGL's long-term focus on sustainability aligns with India's green energy goals, making it an attractive partner for investor technology provided in renewables. Thank you so much.
Thank you. I think we can now go to the question answer session. So please, I think, tell your name and then what way we want. We want to go ahead with a lot of questions and then we can respond, or whether you want to have one by one. Whatever way, I think then I'm okay. Generally, whatever way it's preferred by the house. Let's decide that first. So one by one, or one by one? Okay. So then I have one request. We should not repeat the question and repeat in the same kind of in the different kind of. That's all. Thank you. Let's go ahead.
Thank you.